Welcome back. As we mentioned earlier in the show, the Dow, Nasdaq, and S&P all closed down the day negative, even though they roared out of the morning with big gains. This volatility is, at least in part, a kind of verdict on President Trump's tariff regime. I want to bring back in Martin Baccardax. He is the senior editor and chief markets correspondent for the financial news site TheStreet. Great to have you on, Martin. I want to play for you some sound from the U.S. Trade Representative Jamieson Greer about this approach, and I want you to evaluate it on the other side. Let's listen.
As the countries come to approach us, what we've told them is if you have a better idea to achieve reciprocity and to get our trade deficit down, we want to talk to you. We want to negotiate with you. And it goes both ways.
So, if you have a new idea, we want to negotiate. But what does that mean to you? How do you read that, Martin?
To be honest with you, I think it starts from a flawed premise. It assumes that all trade deficits are a bad thing for the economy that runs them, and I just don't accept that. The United States has been the runaway economic success for the past 50 years, and certainly since the COVID pandemic. And the fact that trade deficits have been a part of that, I don't think is a coincidence. You get, as a result, as an American consumer, cheaper goods. At the same time, you also get billions, in some cases trillions, of capital inflows because the money that Americans spend on those goods is recycled back into the economy. That drives stock prices up, it drives treasury bond yields down, it keeps our mortgages lower, it keeps our interest rates lower, and it ticks over the economy as a result. So I think the premise is flawed, and therefore I'm not sure you're going to get fresh ideas that are going to satisfy lawmakers who have been pressing this issue from a political point of view rather than an economic one.
And Martin, there's an interesting dialogue going on from the White House, and it runs something like this. And it's not the headline thing they say, but it's implied in what they say. The U.S. economy is really strong now, and it can withstand a little bit of turbulence better than other competitive free market economies, meaning they're going to have to bend to our will. And one of the things that I find interesting about that subtle line of argument is that's not what this administration, when it was running for the White House, was saying about the U.S. economy before the election. They were saying it was in terrible shape. Now they're saying it's so resilient and strong, it puts the United States in a uniquely powerful position. Evaluate both sides of that.
No, it's a great point, actually, and that's the practicality of politics, isn't it? You tend to campaign in poetry, but you govern in prose. And I think right now we're talking about the prose with respect to the Republican Party, speaking of the resilience of the U.S. economy. I think to some degree there's some truth to that because it is a consumer-led one and the consumer remains relatively healthy, particularly when it comes to the labor market because we have very low unemployment. And thus far, we haven't seen the stresses in that would indicate a slowdown in consumption. Now, the flip side is, can that American consumer withstand or perhaps sort of wait out the trade war that we anticipate is coming not only tomorrow, but in the months ahead? And quite honestly, I just don't know that we have the answer to that question. I harken back to an issue back in about 2017 or 2018 when there was a passenger who was dragged off a flight because it was overbooked. It was quite a sensational story, and he made quite a ruckus as a result. He was unwilling to accept $1,000 in compensation for a flight that he paid $200 for. Because as an American consumer, he wanted what he wanted. I'm not being critical of that, but I am saying that's probably a reflection of consumer sentiment now, and that does make me question whether the American consumer has that resilience to ride this out.
Which goes to this underlying great unknown. Can the United States essentially break the will of its trading partners, starting with China?
That will be difficult. I think to some degree, China has really decided to hunker down and try to win this on a long-term basis. But in order to do that, I think China's going to have to do one thing that it's been very reluctant to do, and that is stoke domestic purchasing. In other words, stoke their domestic consumer. I think the assumption has been, from a political lens, that if you get Chinese consumers purchasing domestic goods and exercising that kind of consumer freedom, political freedom is not going to be far behind. And I don't know that that's something the Chinese Communist Party can abide just now. So they have been reluctant to do that. Now, if they can probably ride that out. But if not, and they ride it out on the strength of only their export and manufacturing, then they're probably playing a weaker hand than the one they have now.
Excellent stuff. Martin Baccardax, I appreciate it very much. Thank you, sir.